Good morning and welcome to Q4. We are now at the end of what has been an eventful year. You know, we've certainly made some progress, but there's certainly been a few things that have gone on that have made us think. So I'm going to put one of the guys on the spot. How about Georg? Georg, what do you think has been the most impactful thing that's happened in crypto this year?
It's probably going to be the timing of when Michael Lewis decided to publish his book on SPF. I know, jokes aside, I think probably the most impactful thing for me personally was BlackRock filing for a spot ETF this summer.
Yeah, I think that's a good shout. We are going to cover ETFs today. We're going to cover talk a little bit about FTX and SPF's trial and things like that. But yeah, I think that's a pretty good shout, Georg. And you certainly chose one of the more positive news stories. So thank you for that. Otherwise, in the show, we're going to be covering ETH futures, some BTC outperformance. We look at the grayscale discounts and how they've changed as a result of the ETH futures ETF. We're going to talk about macro, tokenization, and anything that our special guest, Seth Ginns, is happy to talk about. And he's happy to talk about many things. So Seth, welcome to the show. Thank you for joining us.
Thanks for having me, Ben.
It's Seth is a very close friend of Coinbase. He's managing partner at CoinFund's and head of liquid investments. He's a real crypto OG. Full disclosure, I think Seth was an early investor in Coinbase in sort of 2012, 2013 time. And he's been investing in the space since then. Back then, he was on the buy side at Jensen Partners, where he spent 18 years before making his full-time jump into crypto. Another disclosure, I am lucky to be an LP of CoinFund's as well. But Seth, super happy to have you on the show. And we're going to bring you in throughout the show as we talk about the various different topics today. But first, some quick housekeeping. If you are watching on YouTube, don't forget to scan the QR code so that you can access David and the team's fantastic research. If you are listening on podcast, all of the links will be in the show notes. And don't forget to like and subscribe. It's how others can hear about the podcast and hear the fantastic content the team put together. But let's get started with a market update. And as mentioned before, we're going to bring Seth in throughout the show to comment on the various different things that have been going on in crypto. But Georg, over to you. What's happened in the last week in the crypto markets?
Yeah, thanks, man. A lot of green, as you can see on the slide, on a week-on-week basis. But, I guess we shouldn't get too carried away. If you look at Bitcoin and ETH, those have obviously done pretty well, up 5% each, roughly. So that essentially comes on the back of better sentiment, some positive news from the FTX estate, plus a lot of hype around the ETH futures ETF, which has launched yesterday with a slightly disappointing start, but we'll talk about that at length later. If you look at the price section, over Sunday and actually the first half of Monday, I would say it did look like we might break above the 100-day moving average in Bitcoin. But then the market has done yet another time a round trip and retraced all the gains. So it almost feels like there's a bit of I would say, Pavlovian reflex to fade rallies after our experience, for instance, with Grayscale and the positive news there about a month ago. And on the altcoin side, if you look over there, some of the outperformers, Solana did very well, up about 24%. And again, that comes essentially on the back of the FTX news. And then we had Arbitrum trending as well because they announced a $50 million ecosystem fund. So a lot of people watching the ARB ecosystem tokens at the moment.
Perfect. So thank you for that, Georg. Let's get started with the ETFs. I think we have a slide coming up next that shows some of the volumes from day one. Seth, would love to bring you in. Obviously, you're in a space when BITO launched and we had some decent volumes there. I guess what were your reflections post day one of the ETH futures ETF launch?
Yeah, so it's interesting. If I remember correctly, BITO had about 570 million of inflows in the first day. So this is clearly a lot less than that. Both future strategies, BITO was Bitcoin futures. It was the first ETF, and this is the first ETH futures set of ETFs. My view on this is. The advisor community is ready for a Bitcoin spot ETF. They know how they want to allocate that within their clients' portfolios. I think Ethereum is still a little further down the learning curve for them. So I think this is a scenario where we're going to get this out there. You're going to have a gradual increase in market cap as as we progress through this next bull market, the products will be there as people are ready to engage. But I think ETH futures needs a little bit more market strength to really see inflows. Whereas I think Bitcoin spot could come in any market regime, and there are a bunch of allocators, particularly the financial advisor community, that already know what they want to do with that and how they want to put in their clients' portfolios.
Yeah, I mean, that makes a ton of sense. The environment of the Bitcoin futures ETF was very, very different. I think we were trading at close to all-time highs, whereas here we've kind of been range bound, vols very low, and I think there's a certain level of apathy, especially with rates where they are. And we obviously have the FTX, SBF court case today as well. So yeah, very, very different environments. I guess I'm curious, like, what should we, or I guess, how are you thinking about the Bitcoin spot ETF, and how are you positioning ahead of that?
So there was a really interesting dynamic that happened with the Bitcoin ETF filings that were supposed to have their second deadline in mid-October. So they were delayed, but they were delayed with a slightly different mechanism than what we've seen in the past. They were delayed with comments, and now what we're hearing is the SEC is bringing in the market participants that had filed for spot Bitcoin ETFs in order to go through the responses to those comments. So we're hearing there's actually still a chance that we get those by year end. Again, the level of engagement seems higher than what we've seen in the past. Before the delays, our view was 60% chance by the mid-October deadline, 40% chance between mid-October and March, which is the final deadline for them. I'd actually now say 60 to 70% chance that we get them by year end with the new color that we've gotten around this recent delay.
Interesting. And David, we'd love to bring you in here. How are you thinking about it now with the new news that we've got and of late?
Yeah, the only thing I would add to what Seth said is I think that what we saw from the ETH futures ETFs tell us that it's very likely that we're going to see the whole group or the whole set of Bitcoin spot ETFs being approved. Whereas previously, I think there was some concern surrounding whether one of these ETFs would actually have a first mover advantage. So I don't think that's going to be the case anymore.
Yeah. And Greg, we'd love to bring you in here. So you were looking very closely at Basis yesterday. Can you just talk us through how that traded and kind of where we are now?
Yeah, so Basis, it's one of those things where it's either there or it's not. Yesterday morning, especially before the U.S. equity markets opened, Bitcoin Basis specifically was trading north of 15% annualized at times. That came in and settled closer to about 7% as the day went on, and we saw both U.S. equities sell off, rates continue to sell off, and the crypto markets soften. So again, we've talked about it before. It's if you want to take advantage of it, it's one of those things where you have to be ready for.
And Seth, I would love to hear your thoughts on the Grayscale appeal deadline. So that's obviously coming up on the 13th. What do you think is the most likely scenario there in that context?
I mean, it's interesting. So Grayscale is saying that they sent a letter into the SEC the week after the court win that basically said they believe they are deemed approved, but they still want to partner with the SEC on this. So that could be behind the change in delay type that we've seen for the other filings. Does that mean we're going to get an approval in the next 2 weeks? I'm not sure. But I think we're seeing enough signs that there's real movement there that it seems like the odds of getting that by year end are still pretty good.
And how much of a disappointment do you think it is? Obviously, there was a ton of excitement leading into it, and it really has been a slightly less than exciting launch. Like, do you think there's anything to be concerned about, or is it really just the setup is very different, and we're waiting for the spot version versus a futures ETF? I
really think it's just the setup for ETH in particular. You had ETH BTC, so ETH in Bitcoin terms, go up quite a bit in the 10 days leading into the approval date. And then you completely retrace that move when the ETFs didn't have a lot of inflows. So I think that's the broader impact on the market. There was a little bit of broader altcoin engagement that was coming with that ETH move. And we had down moves in those altcoins yesterday, but they actually held on to most of the gains that they had seen. It was only ETH versus Bitcoin that really just completely retraced the move that it had.
Yeah, that makes a ton of sense. George, just going through some of the other news items. You mentioned jokingly kind of FTX and SBF and Michael Lewis's book. Where are we with FTX claims at the moment? They were trading up post the Anthropic Amazon deal.
Yeah, exactly right. So some pretty big news last week. So FTX claims were trading as high as 48% for FTX US and 40% for FTX International. And that essentially follows after reports that about $7.3 billion overall have been recovered. Now, beyond that, as you mentioned, FTX has other assets and investments on the balance sheet, most notably an investment of $500 million that they made into the AI company Anthropic from September 2021. Now, that one's particularly interesting because Amazon has shown interest to invest up to $4 billion into the company, and $1.25 billion have already been committed. So that was pretty good news for FTX. Outside of that, the FTX trial is actually starting today, so the jury selection is starting there. And obviously, just in time, Michael Lewis's book on SBF has been published today, and it has already been getting some criticism on Twitter for allegedly portraying SBF as a victim rather than the perpetrator. But definitely looking forward to getting a copy and reading through that. Other than that, one last piece of FTX-related news. When the exchange was going down, as you all will remember, there was this so-called FTX hacker that misappropriated 163,000 ETH worth in November 22. So there was some wallet movements last week. Namely, $38 million were moved from those compromised funds. But the identity of the hacker is still unclear, but there's some speculation that it could be a former employee.
Yeah, it's crazy, isn't it? We've also got John Ray going through the estate, but then there's, I think it was $600 million at the time of the hack that was taken, that we have no idea where that's moving. Perfect. Thank you for that rundown, George. Are there any other headlines worth noting? I know obviously we had a few registrations and approvals and licenses throughout the world.
Yeah. So a couple of positive Coinbase headlines. Coinbase got approval by the BMA to enable perps for retail clients. We also got a major payment institution license in Singapore. And outside of that, also got registered with Spain's central bank last week. So a pretty busy week for Coinbase here. Outside of that, a couple other interesting things. UBS is piloting a tokenized money market fund. So that trend of real world assets being brought on chain is definitely continuing. And Binance is selling their Russian business to a company called ComX.
Perfect. Thanks, George. And before we move on to macro, Greg, I just want to bring you back in to talk through the ETH and GBTC discounts. Did they move at all yesterday on either the news that Grayscale were applying to convert ETH into a Ethereum Spot ETF, or any of the other news?
No, they've been pretty stable, and it was even the ETH discount was also stable, which was surprising to us on the desk. Given the filing to convert into a spot ETF. So again, those are still around 20%, 21% in GBTC, around 30% in ETH. We'll have to wait to get more news out before we likely see those narrow much.
Got it. Thank you, Greg. And moving on to macro, David, what have you been keeping an eye on this week?
Yeah, I would say there was a lot of optimism coming in this week, particularly after the core PCE data kind of came in under expectations. The U.S. obviously avoided a U.S. government shutdown, was ostensibly should have been positive. But we saw that even though crypto did pretty well, traditional risk assets like stocks did not. So I think the expectation or the theory at the moment is that yields are just super high, and that is actually containing any particular optimism with regards to risk assets. And that's kind of strange given the fact that we're in a seasonally better kind of period. But I would love to kind of get Seth in here and see what he thinks about this, because I know he has a pretty strong theory about how the U.S. dollar index kind of interacts with a higher yield, and that of course affects what's going to happen with crypto.
Yeah, so I think two of the biggest inverse correlations that we see for crypto are starting to shift to potential tailwinds. So crypto seems to be very strongly inversely correlated with the dollar, and just think the DXY as that indicator, and also with real yields. And on the dollar, we just had a little action this morning, but if you look at where the yen is, the yen went up to 150. That is the level where the BOJ has tended to intervene in the past. It's the level that they intervened at just about a year ago, a little later in October in 2022. And the RMB also is back to its kind of fall of 22 levels. So we have two currencies, two critical trade currencies that look like they are getting to points where they're not going to continue to fall, which I think is part of a constellation of data points indicating that the dollar might be getting near a peak. And that dollar rolls over again, crypto inversely correlated. So if the dollar's falling, that's a tailwind for crypto. The other dynamic is real yields. And we've had core inflation, as you noted, coming in lighter than expected. I think the Fed has been pointing to core inflation as being the key indicator that they're focused on. But what's interesting is headline inflation is actually moving up still, with energy prices moving up. So you have a dynamic where core inflation could have the Fed either being one raise away from being done or actually being done. We're getting mixed messages out of governors. Headline inflation still accelerating, and that leads real yields to come down, assuming that the Fed is really watching core inflation, and that's going to lead them to not raise rates more. The other interesting dynamic is at the 2-year point within the yield curve. You're starting to see that look toppy for a period of time, within a day, actually, so not too long. We had fully retraced the move higher in the 2-year. So that happened on the Fed meeting 2 weeks ago. So that was last Friday. We had fully retraced the move higher. Now we've bounced a little bit, but that 2-year is looking like it's getting toppy. That's leading the 210 to steepen, which again, all of this looks like we're kind of moving further along that path toward a slowing economy. That should have a disinflationary effect. Real yields potentially rolling over, dollar potentially rolling over. That seems to be creating support for crypto and Bitcoin in particular. And if you look at what Bitcoin has done since the beginning of September, it's been a difficult period from the beginning of September to today for equities, but Bitcoin's actually up about $1,500 over that time period.
Yeah, I like what you said there, because, over the last week, we've seen a lot of headlines with regards to what Larry Fink said or Jamie Dimon said, and they've been asked about what their view is on yields. And I think Jamie Dimon was saying 7%, Larry Fink was saying 5%, but they're talking about nominal yields, whereas what you're talking about are the real yields. And I think that's an important point, because you and I've spoken about this before, but you still believe that there's a disinflationary trend kind of built in here. And I have a chart on this as well, if we can kind of show it in a bit. But in my view, like, we're already seeing that the acyclical component of core PCE, for example, dropped like 18 months ago. And now we're just kind of getting around to the cyclical side starting to kind of come down. I mean, what's your view on this? And kind of, can you bring it back to economic activity as well, and what your position is in terms of whether we aren't going to have a recession?
Yeah, I mean, I would say I think the odds of a recession are clearly going up, and you would expect that. That's part of what the Fed is trying to do to slow inflation. When they talk about a soft landing, the reality is soft landings are not that common, and they're trying to slow the economy to bring inflation down. I think when you look at inflationary pressures in the long term, there's some very big disinflationary headwinds. AI being one of the biggest one, but just technology acceleration in general is bringing a wave of disinflationary pressure. And my bias is I think Powell, who grew up at the Fed last decade, which was a decade where the Fed did everything they could to try to get any ounce of inflation in the economy. They were dealing with this constant disinflationary pressure. I think Powell is in the back of his mind saying, we have a bunch of the same long-term secular disinflationary dynamics at play. So let's make sure that we don't overdo it on tightening, because at some point those disinflationary pressures start coming through. I think a lot of the other short and medium-term dynamics beyond crude do look like they're pointing more toward disinflationary. That's obviously dangerous to say, though, because crude and energy prices can start to ripple through the economy. But the other thing that's been going around a lot recently is the cure for high oil prices is high oil prices, right? So what level's necessary to start to have a slowing effect on the economy as well, particularly in an environment where people have spent down their savings. So it's a little different from 18 months ago, where people had a lot of cash because of the fiscal spending, direct stimulus, not paying student loans. Now their cash positions are coming down, which means you will start to see most likely a bigger impact from some of the shorter term moves in energy, which could start to slow the economy. You're starting to get a bunch of articles about Google searches of gasoline prices going up and concerns about that inflationary impact and what it means on their ability to spend on discretionary items. So again, that would be very short term, and that could lead us into a faster economic slowdown.
But then what does the Fed do? Because right now they're in more or less a sweet spot, because yes, you might be right, headline inflation could be rising because of energy, but core CPI still seems relatively well contained, and that's what they profess to care about. Meanwhile, for the most part, U.S. economic activity right now is doing okay. Like, there's no real reason for them to kind of move away from a hawkish stance, for example. So where does that kind of leave us with the Fed? And how does that inform what your decision-making process is as far as crypto?
I think it leaves the Fed as being data dependent, which is a Fed that I think is a very constructive Fed for risk markets. And that's not just crypto over the medium term. In the short term, you can have dislocations, but a data dependent Fed is a similar setup for the Fed that we've had through prolonged bull market periods. So it's a Fed that will want to convey higher rates for longer, will want to convey caution. You've heard Powell say over and over that he wants to be careful. So it's a Fed that is saying we think that rates should be higher right now so that we don't unhinge inflation expectations. But at the same time, if we start seeing signs that the economy is slowing, we're ready to respond to that, probably first with signaling and discussions, and then with rate cuts as necessary. But that data dependency is what's so different from 22, where the Fed was saying inflation is our focus. And if that means that the economy has to slow, so be it. We're going to continue to raise rates and fight inflation, regardless of what's happening with the economy. I think data dependency very strongly implies that they're going to be sensitive to what's happening with the economy.
So Seth, a super good conversation there with David. I guess I just want to extract the kind of a few takeaways here for our listeners. Like, what are the three things that you're going to keep a really close eye on to try and figure out what the Fed may do next?
So I think one of the most important things is the dollar. So seeing the dollar peak and start to roll, very important. I think watching the 2-year at this point is important as well. So if the 2-year continues to kind of be in this range or start to roll over, that's a very good sign for the Fed that we're coming into the period where they should start thinking about cuts rather than increases. And then I think a really important thing for crypto, because it's not a US asset, it's a global asset, is looking at what we're seeing from a liquidity perspective globally. So when you start seeing currency interventions, that's a sign that we're starting to get into this phase of material liquidity provision globally again. And what happened with the yen today, where it went to 150 and then it immediately went down to, or appreciated to 147.5 within less than a minute. We'll find out over the next 24 hours if that was actually a BOJ intervention or if that was just traders that decided to buy or cover their shorts. But I think we're getting to a point where we're going to start to see liquidity provision abroad, which is going to start to be a support for risk markets as well, particularly crypto global markets.
That's a perfect segue, Seth. I know you were traveling a lot. You're based in New York, but you've been in Hong Kong and Singapore and various other places recently. I'm curious, like, what is the thought process around digital assets in the Far East relative to the US, where obviously we're very focused on ETFs, we're very focused on regulation?
So our view that we talk a lot about in the US is the fact that we believe we're on the path toward regulatory clarity. And that's a result of the actions that we've seen from the SEC, the CFTC, and the fact that that's leading to court decisions, which are going to provide a lot more clarity around what crypto companies can do in the US today and what we need more clarity from Congress on with regard to operating crypto businesses in the US. So we think that's actually, that process is a big de-risking element in its own right, and that's the center of conversations in the US. Over in Singapore for Token 2049, regulation was not, the US regulation was not the first thing that the conversation started out with. There were a lot of discussions around the openness of Hong Kong to crypto, the fact that the Hong Kong Monetary Authority has been very visible, very vocal in their support of the asset class and their desire to attract businesses to the city, and then the competition between Hong Kong and Singapore, which I think is fantastic, having two big money centers, global money centers, competing for crypto business, a very good dynamic. The tone overall among allocators was constructive, with a view that both macro and some of the tailwinds that they're seeing regionally point to this being a good time to dust off their crypto playbooks and think about how to deploy for what they expect to be a very good year next year, driven by the halving, when Bitcoin's new supply issuance gets cut in half, which is expected to happen in April. And there's a really interesting dynamic that's happening. So I also went to ETHCC in Paris in July, and that's the one of the biggest European developer conferences. Attendance was up 140% this year versus last year. And people left saying, wow, I feel really good about the developer activity on the infrastructure side. We're building this robust infrastructure tech stack that people are going to be able to develop applications on top of in the next bull market. But there was a lot of commentary around, but why aren't we seeing any of that application development today? And any is probably too harsh of a word, but there was a lot more startup activity continuing to flesh out the infrastructure stack than there was actually on the think B2C application layer. Now, the commentary in Asia was actually quite different, which was because Hong Kong is opening up, we're seeing a lot of Web 2 developers from mainland China come to Hong Kong to develop. They don't feel comfortable doing that work in the mainland because it's still illegal to work in crypto, but they feel comfortable and encouraged to do that in Hong Kong. And what's really cool is if you think about the businesses, the Web2 businesses that they're coming from places like ByteDance, right? TikTok. They're coming from places like Tencent, WeChat. So they're coming from some of the most successful, most viral global consumer applications ever, right? So very complementary to the fact that in North America and Europe, you're seeing a fertile development environment for the infrastructure stack. In Asia, you're certainly seeing infrastructure development, but it seems like we're just on the verge of having a wave of Asian application developers, particularly mainland Chinese application developers, starting to focus on the space. And that combination could be really exciting.
Yeah, I think we're all definitely keen to see where we can get some kind of not real, but like maybe consumer applications built on top of Ethereum specifically, but other layer ones and L2s as well. So yeah, exciting to hear that. And I think we often don't get enough of the perspective from Asia. We kind of see it as a very US-centric thing, and it's obviously not. It's a global phenomenon. So that is very, very helpful. Well, thank you very much for that, Seth. We'll bring you back in a second, and we'd love to move on to flows now. It feels like we've had a bit of a change in sentiment. Greg, what are we seeing on the desk?
Yeah, thanks, Ben. So yesterday was the biggest volume day we've had since late August when we got the grayscale ruling. And, even over the weekend, we saw a number of various accounts come in off the sidelines and really focus on the majors, both BTC and ETH. Now, unfortunately, yesterday, the price action didn't hold up as some of us might have hoped for. I think one of the reasons was obviously the lackluster volumes in the Ethereum futures ETFs. I was speaking to a few traders yesterday, and there was both some surprise and a lot of disappointment. I don't think if you asked a single person, before yesterday, how much they thought would trade on day one, that anybody would have said less than a few $1 million. So I think seeing those numbers really added to the risk-off mood. The other thing going on is, the price action and where BTC is from a technical standpoint. I think we have a chart on this. Bring it up. Yeah, there it is. Okay, so we don't often show charts on this or price charts on this podcast, but I think this one's an important one. So Bitcoin in particular is really up against some pretty strong resistance at the $28,000 level. That's where both the 100-day and 200-day moving averages come together. Now, they matter because until we convincingly break above them, systematic traders will use these levels to de-risk. And we saw some of that yesterday. Furthermore, on the bottom of this chart, you can see that Bitcoin's correlation with the S&P has actually risen over the past month from very low levels to near 50%. And not a great time to be correlated with the S&P, given where rates are, where the equity risk premium is. So I think, again, that's also adding to a bit of a risk-off mood here. I keep saying it over and over again, but it's going to take some positive news on the ETF front. We may get that if the SEC decides not to appeal on the 13th before we break convincingly higher, in my view.
Greg, I know you're one to look at seasonals. October is typically a slightly better month. September is a tough month for digital assets. What can we hope for or expect in October?
Yeah, October is generally a very good month for crypto. I think I've heard it called Uptober. I think the average return over the last 5 Octobers, for Bitcoin has been plus 16%. So from a seasonal standpoint, it looks pretty good. The one thing I would caution is those numbers generally come after very bad Septembers. So there is some mean reversion there. Now, as Seth rightly pointed out, we didn't have a bad September this year. We were actually up 4% for the month in Bitcoin. So we may not see those, very strong returns, but that's still yet to be seen.
Perfect. And Seth, would love to bring you in here. I know you're one that looks at technicals occasionally as well. Is there anything you're keeping a close eye on? Any kind of important levels?
Yeah, well, so first of all, on the seasonals, I thought it was really powerful, Greg, to your point, that Bitcoin was up in September, which is usually a difficult month, but the NASDAQ and S&P actually played into their typical seasonal. So in an environment where you saw equities weaker in September, you actually had Bitcoin up, and that was a pretty significant seasonal divergence, in my view. I don't have that much to add on the technical side to what Greg mentioned. I think it's really important that we've actually had a pretty constructive price movement. It's been volatile, but it's been a pretty constructive price movement since the beginning of September, despite equity markets actually having a challenging period. And we got up to the 200-day moving average, the 150-day moving average, very important levels. And we retraced from there. So we'll have to see if we can continue building on this momentum or if it reverses. Again, I look at the move from the beginning of September, and this is divergent. It's different from what we're seeing in equities, despite that correlation having moved up to 50%. And with that divergence, there's a lot of room with what we talked about with the dollar, what we talked about with real yields, to push through the key levels that are less than $1,000 above here in the next few days, weeks, with some headline.
Yeah, I think that's definitely fair. And before we wrap up, Seth, would love to hear from you. What else is exciting you at the moment? For example, real world assets. There was a great video from Jenny Johnson from Franklin Templeton. Hat tip to Greg for sharing that one. That distilled the value of that very, very quickly. I'm curious, are you guys looking at that at all? Are you investing in there in infrastructure or elsewhere?
We are, and what's really interesting is real world assets as an investable area has been around for a long time in crypto, and every prior time has ended up being a little bit of a head fake. We haven't seen the follow through that we were expecting. This time actually seems like it's different, and the way I like to frame it is higher yields ended up being a big headwind for crypto broadly, both liquid and venture. But what higher yields also did was it drove a lot of businesses to say, hey, we want to come up with a stable coin that actually offers yield. We think that's a really interesting product whose time has come within the market. So you had a lot of experimentation working with existing regulatory regimes. We're investors in a company called Superstate, founded by Rob Leschner, who founded Compound. So we're seeing yield-bearing stablecoins or yield-bearing money market funds money market tokens be the first entryway into this resurgence in real-world assets. But now people are taking that same approach from a regulatory perspective and saying, what else can we put into these regulatory wrappers? What else can be easily tokenized? So higher yields hurt crypto prices in the short run, but they ended up creating this this wave of innovation around real world assets that seems to be picking up steam right now and seems to very much not be a head fake like what we've seen over the last few times that there were bursts of excitement around RWA. In the long run, it's very clear to us that this is a very big addressable market. This is going to be a core use case. Regulation is so important to this. So it's great to work within the existing regulatory regime. It would be even better if we had regulatory clarity around digital asset securities and could just open those doors wide open for innovation at the intersection of broader securities and crypto rails. So we're very excited about this area. We think there are going to be a lot of big outcomes as the market matures when we have that cycle for RWA. And I'd say the data points so far actually point to a good chance this is that cycle.
Yeah, it does feel like it, doesn't it? Because every kind of large institution that works on securitization of traditional assets seems to be looking at it. And I guess just to extract one thing I really love from what you said there was high rates were tough and a headwind for crypto in many ways, but then it just innovated and created something new, which is interesting and has other use cases, which are slightly different ways. So yeah, I think crypto is anti-fragile in many ways, and there's just a ton of innovation and building in the space, which continues to bring new and interesting products to us.
That's right. And by the way, I think it's super important to highlight, you mentioned Jenny Johnson at Franklin Templeton. They've continued to innovate in crypto through the bear market. I think just a really good indicator that big financial players, obviously having BlackRock come in on the ETF as well, big financial players see this as an industry that's here to stay, where there's a lot of innovation happening through the bear market. And we see that in developer numbers.
Yeah, 100% right. I do quite like the A16Z state of crypto monitors, just as a really quick way of getting a pulse check on what's going on. But Seth, I know you're a busy man, but one final question before we wrap. I'm going to put you on the spot, similar to George. What do you think so far has been the most impactful news item in digital assets for 2023?
So I actually think all of the regulatory actions this year, when we look back, will end up being the most impactful dynamic from 2023. The regulatory actions, while they've been painful in the short run, are setting us on the path toward regulatory clarity. The way I like to frame that in a financial sense is what's happening right now with every court decision that we get, and we have a bunch that we're going to get clarity on over the next 6 to 12 months. Every court decision gradually lowers the discount rate that we're applying to the industry, which should increase value. So I think we'll look back on 23 as being the start of the great regulatory de-risking, or the start of the great regulatory clarity for the industry. And it's such a huge unlock to be able to take the innovation that's more or less been sandboxed as crypto specific and open it up to the broader regulated securities world. I think that's what's going to have this immense impact on the US economy and the global economy. And I want to be very deliberate in saying the US economy, because we're going to get there. I think the US is going to be a very big player in crypto. We're very bullish on both the US and all of the other jurisdictions globally, but we see the regulatory actions as being part of a necessary regulatory clarity process.
Well, I couldn't think of a better way to wrap for this week. Seth, thank you so much for joining. Always a pleasure and a lot of fun spending time with you. Thank you so much to David, Greg, and George, and our fantastic production team. We will see you next week. Take care.